So hint number one on this one is, it is this bell curve, and it uses what's called the empirical rule. Remember, we have the mean in the middle, and we go out in steps of a standard deviation, 3 in each direction. What would the number be in the middle here? 84. As we go this way, what's this first number? 75. How'd we get that? Subtracting 9 going that way, but yes. Now remember, there's the percents that fit in there that are always the same. So that's your hint. I'm going to give you another couple minutes to go at it. Hopefully that helped. So I'll fill in the rest of the numbers across the bottom there for you, just going up in steps of standard deviations. So any questions on where these numbers came from? Okay, and those numbers are the ones that actually change depending on the situation. They depend on the mean and the standard deviation of that particular situation. The next numbers never change, and those are the percents that are in here. This is 34.13% in both of these spots. This is 13.59% in both of those spots. And then we have 2.15% and 0.13%. From there, the rest of this is just a simple addition. So if I want to know how many of them would be less than 66, here's 66. Less than would be this side. That adds up to be 2.28%. Now, it didn't ask what percent of them is less than 66, though it asked, yes. Yes, yes. Okay. So again, it doesn't ask what percent of the students, it says how many would be there. So out of 120 students, how many do we expect? Well, 2.28%. So 2.28 times 120 divided by 100 is 2.736. So you would probably round that to 3 students, because pretty sure 2.7 students is not real possible. So then the second part, more than 93. So I'm going to erase this. Here's 93 right here. More than is on this side. So we add those all up, and it's 15.87%. So to find how many that is, 15.87% is 15.87 over 100. We need to know how many that would be out of 120. So I get 19.04. So again, probably round that to 19 students. I left the 0 off the 120. I cheated. Saves me some calculator strokes. Then the last one. Between 75 and 102. Here's 75, here's 102. Between is adding up those percents, which is 81.65? 85. 81.85%. So we have 81.85% is 81.85 over 100 equals blank over 120. And we cross multiply and divide. 81.85 times 120 divided by 100 is 98.22. So approximately 98. Any questions on those? Is that a little bit more clear for those of you that were struggling with it? This is one I just made up, but it's very similar to ones on the homework. Yeah, there are a couple on the homework that are similar to it. Okay, any other questions from last week's homework or last week's lecture? Okay, well then, today we're moving on from statistics. Statistics are going to be put behind us for a while. And we're going to talk about merchandising. Now, what we look at, there's actually two steps in the process here. There's a manufacturer or a producer that actually creates the product, whether they're growing a product or assembling it, creating it somehow, they create that product. And then they're also going to double as our wholesaler. Rather than a manufacturer, it could be just a wholesaler. What a wholesaler is somebody who gathers the product from different producers and then gets it to the retailer. In the center of this is a retailer. The products will go from either the producer or the wholesaler to the retailer. And then the retailer is the one who generally will turn around, arrange the products, and then transfer them to the consumer. So what we're going to look at tonight is this step right here, from the producer or wholesaler to the retailer, and how that works. So what we're looking at is we're looking at somebody who's not just buying one or two items for their own use. They're buying several items with the intention of turning around and selling them to other people. So you might have considerable amount bought, and in that case, there's usually discounts that apply. And that discount is referred to as a trade discount. Some of these wholesalers up here, not necessarily the producers, but some of the wholesalers do sell directly to consumers. Well, if they sold directly to consumers at the same price they sold to retailers, retailers would suffer. So if they're selling to a retailer, they use what's called a trade discount. They give a little bit of a discount off of it. And the reason for it is the retailer is going to buy several of them rather than just one for their own use. So they can make several sales at once rather than going through the work of selling items one by one directly to consumers. So that trade discount, let's say that you're a retailer and you've earned a trade discount with this wholesaler and you receive a 7% trade discount. Now, list price is what would be charged directly to a consumer. So you receive that 7% trade discount. How much would you pay for items listed, in other words, list price, at $760. Now remember, we had that little table that we were using for when we had a percent increase or decrease. And this is a percent decrease. It's a discount. There's a list price. From it, we are subtracting a discount to get, now the official term here is net price. The net price is the price after the discount. So as always, there's the two numbers that describe everything in this table. One is a percent, and the other one, once again, is a dollar amount. So what do we have in this problem? What's the 760? It's the dollar amount of the list price. Okay, the list would be 100%, and the 7% is the trade discount, right? So now we can use that to calculate 100, we're subtracting because it's a discount, so 100 minus 7 is 93% is the net price. Now, we have two possible things we could be looking for. Are we looking for the amount of the discount or the actual net price? We're actually looking for the net price. So this is what we want right here. So we're going to ignore this middle row. And what are we going to multiply? Perfect. 760 times 93 divided by 100. Is $706.80. That's the net price. Not so bad, huh? 100% minus the 7% discount. Now, this happens often enough in merchandising that we want to have some shortcuts for it. By the way, this net price is usually the price that's going to show up on the invoice. You're going to get some sort of an invoice from your supplier saying, listing out all your expenses. But anyway, this is a process that happens often enough that we want a shortcut. And we had mentioned back in Unit 1 when we did percents that there are certain shortcuts we take with percents where rather than using a proportion, we use the rate method of percents. And this is one of them. There is a net price rate here called a net decimal equivalent. The net decimal equivalent is just the rate of the net price. Well, in this problem, what is it? 93%, or as a rate, 0.93. And then there is a single discount equivalent. And yes, that is the rate of the discount. Rate of the trade discount. What's that? Wow, this thing's not doing well tonight. Yes. This computer's been like letters and lines have been disappearing off the screen all day. So let me know if that happens. Yes, the single discount equivalent is the rate of the discount. And in this problem, it is the 7%, which as a rate would be 0.07. This is the one that's usually given in the problem, is the single discount equivalent, or the single discount. But what we are more interested in is the net decimal equivalent. That's the one we really want to use. So let's look at a situation where you get a trade discount. Now, first of all, where does the trade discount come from? Well, there's several things the trade discount can come from. One is just a courtesy because you are a retailer. So it's that business to business courtesy. It's often quite a bit easier to sell to another business than it is to sell directly to consumers. Second, volume. A store is going to buy way more products than an individual consumer is. So you're going to give that store a break. If you're selling toasters, a consumer is going to buy one toaster. A store might buy 10 toasters to put on the shelf. Well, you're going to give them a little bit of a break and still make more money because you just sold a lot of them. And there might be incentives. And we'll explain the incentives in a little bit. Let's explain them right now. Incentives could be, they might have a new product that they're trying to sell or a new product line. So if you buy that product, they'll give you an additional, an extra discount for the first several months to get that product out there and get it on the shelves. Incentives might be you did something last fiscal year or last period that they wanted you to do, so now you're going to get an extra discount for the next period. Things like that. So let's take a peek at an example here. Let's say that Alex receives a 12% trade discount. What is the net price paid and the amount of the discount on items listed at $450? Well, if I want to find the discount, I am going to use that single discount equivalent. SDE is the abbreviation I'm going to use for single discount equivalent. What is the single discount equivalent going to be here? 12%, so 0.12. And what I'm going to do is I'm actually going to use list price times that single discount equivalent. So the list price here is 450 times 0.12 is $54. Any questions there? If I want to find the net price, I'm going to use get up here. net decimal equivalent. And it's going to be the list price times the net decimal equivalent. So that'll be the $450 times, what would the net decimal equivalent be? 0.88, which is going to be, what, $396? Two things you should notice here. Two really important things you should notice here. What is the relationship between those two numbers? If I add them together, they equal 1, right? 0.12 plus 0.88. The single decimal equivalent and the net decimal equivalent, or single discount equivalent, I should say, and the net decimal equivalent should always add up to 1 because they stand for 100%, right? And then, of course, the amount of the discount and the net price should always add up to this thing may need to do a shutdown here at some point and catch up. So the discount plus the net price should always equal the list price. Or the other way around, list minus discount equals net, either way. The reason I kind of exaggerated the importance of this here right now is because in the next step, it is going to become a lot more important. Because we're not going to we don't always deal with single trade discounts. We can have what's called chain trade discounts. Sure. Is that far enough? Chain trade discounts is where there's actually several discounts built into the trade discount. We talked about those different factors that can determine what the trade discount is. Perhaps you get an 8% discount just because you're a retailer. That's their courtesy discount to you for being a retailer. Perhaps you did a certain volume of business with them last year, and you get an additional 5% for volume incentives, or just for volume rewards. And then perhaps they have a new product out there that you've purchased. So when you purchase that product, you get an additional 2% as an incentive for that product. Does that mean you get a 15% discount? No, it doesn't. The way this chain trade discount would be listed would look like this. It's an 852 discount. Now I'm going to warn you, that looks an awful lot like a calendar date. And there are going to be a few other things that we're going to deal with tonight that look a lot like calendar dates, that have similar notations. So make sure you're looking at the context of the problem. When you see something like that, that you're looking at the context of the problem and you're absolutely sure what it stands for. So here, this would either be labeled as a trade discount or a chain discount. And it's standing for that discount from the wholesaler to the retailer. From that discount, we can find the net decimal equivalent, the NDE. Believe it or not, it is easier to find the net decimal equivalent than it is to find that single discount equivalent. We have an 852 discount. If it's an 8% discount, what would be the net rate? Remember when we had there you go. We had a 12% discount. It was a 0.88. When it's 8%, it's 0.92. That's 100 minus 8 is 92%, and we make it into a rate. We move the decimal point to make it 0.92. What would be the net equivalent for the 5%? 0.95. Again, that one, things are disappearing on me again. That one would be 100 minus 5% equals 95%. And we move the decimal to make it a rate. How about for the 2% then? .98. Again, that's 100 minus 2 is 98%. We move the decimal to make it a rate. So now we have to multiply those together. 0.92. That sounds right. So 0.85652. I get asked all the time, how many digits do we round these to? Go to at least 6 decimal places. So what would this get rounded to? It won't, right? It's only got 5 decimal places, so it's good. No reason to round. That is the net decimal equivalent. Now up above, I showed you that the net decimal equivalent plus the single discount equivalent had to add to 1. Well, we can work that backwards. 1 minus the net decimal equivalent has to give us the single discount equivalent. So to find the single discount equivalent, we're going to take 1 minus 0.85652, which is 0.14348. That is the single discount equivalent. Well, what are those numbers good for? Exactly like what we were using up above. Let's look at an example that has more details in it, and we'll show you what those are used for. Does everybody need a second to catch up? Yeah? Okay, let me know when you're ready. Okay. So, let's say that Peyton receives a 7-11-4 trade discount. Find the discount and net price for items listed for $8,400. So to start this problem, we're looking for the discount and the net price. What we're really going to find first is that net decimal equivalent. from the 7, 11, 4. But what's the 7 going to give us? 93, so 0.93. Times, what's the 11 going to give us? 89, so 0.89. Times, what's the 4 going to give us? 96, so 0.96. So it's just, again, 100 minus each of those numbers, and then the decimal points moved over to make it a rate. We multiply them all together to give us 0.79, what, 4592? Does that look right to everybody? You guess? Okay. I just didn't feel like punching it in. That right there could give us then the net price. How would it give us the net price? Take the list price times that net decimal equivalent. Is 6356.74. That is the net price. Next. What's that? You didn't get that? Oh, maybe I punched something in wrong. Oh, that didn't work either. Did I do 80? No, I did. I missed the 4. Okay. Yep, I did do something wrong. Come on. Yes, I typed in the wrong number. So what'd you guys get here? .57. Okay. So 6,674.57 looks better. Okay, perfect. Okay, so then to find the discount, we want to find the single discount. Now we could, at this point, we could just take 8,400 and subtract this, right? But I want to show you how you would find, if you didn't go ahead and find this, how you would just find the discount then on its own. And it would be 1 minus what? 0.79, you got it, 0.794592, which is 0.205408, right? How would we use that single discount equivalent to find the discount? List price of 8,400 times 0.205408, which is going to give us is it 1,725.43? I'm better off not using the calculator. Any questions there? No? Good. Well, it's time to get. What's that? That's the amount of the discount, yes. So that's the actual amount of the trade discount. So Stacy receives a 792 chain discount. What's the difference between a trade discount and a chain discount? Nothing. Yeah, they're the same thing. A chain discount is part of a trade, is a kind of trade discount. They work the same. So Stacy receives a 792 chain discount find the discount and net price for items listed at $4,100. I'm going to give you guys a few minutes to try that out on your own, and then we're going to come back and discuss it. So we're first going to find the net decimal equivalent. And how are we going to find it? .98, right? 7 gives us 93, so 0.93. The 9 gives us 91, so 0.91. 2 gives us 98, so 0.98. Which is 0.829374. Now we just will go ahead and use that to find the net price of $3,443. So $3,400.43. Any questions on finding that net price? Okay. Next, the single discount equivalent is just 1 minus 0.829374, otherwise known as 0.170626. So we can take our 4,100 times 0.170626 should give us $699.57. How are we doing on that part? Is everybody okay with that? Now, as I said, this net price here is the price that would then go to an invoice. So our next step is to look at that invoice and what it means. This is just getting the price that we're going to put on that invoice. An invoice is going to include several things. One is the net price. There's going to be a date. We're just going to do it this way. The date is going to be the date that the invoice was generated. This is sometimes the date that the order is placed, depending on the company. Sometimes it's the date that the product was produced. Most of the time, it is the date that it is shipped. So the date that that product is put on whatever transportation it is going to use to get to the buyer, the retailer. There are then terms of sale. The terms of sale are the next thing that we have to discuss. And the terms of sale can get a little complicated. Yeah. I'm sensing some sarcasm there. But it is 6:19, so it is time for our first break. So let's go ahead and do that, and we'll come back at about 6:29 to talk about invoices. So, talking about invoices, let's look at an invoice. Let's say we have an invoice that is dated 7/29/2017. Wow. Took me a second to see where it was. So the amount the amount is, this is that net price from, you know, all the trade discount stuff is going to be $3,500. We're going to keep it simple for now. Our terms of sale. This is what I said was going to be the big thing on the invoice. We're going to start out simple on the terms of sale. The two things that are always listed in the terms of sale are, and I'll write these out and define them in a little bit, are a discount, bless you, a discount period and a credit period. So the notation here, remember I told you that slash notation that looks like dates almost is very common? Well, here's another example of it. 110, comma, net 30 is how that is pronounced. The 110 is defining a discount and its period. This is what is referred to as a cash discount. Now, cash does not, I mean, you think of cash, you think I hand you the item, you hand me the cash. That's not how it is. Cash in business is early payment, paying before, well before the required date. And then this here is the credit period definition. The credit period is how long you have before you have to pay. If you go past that credit period, there will be penalties, usually interest. It starts to be charged after that credit period. So I'm going to set up a timeline here. The beginning of my timeline is the invoice date. What is that here? 7/29. July 29th. The next date that's going to be marked off here is the end of the credit period. What is that date going to be? Well, the 110 means you have 10 days. So 10 days past 7/29 is going to be 8/8. So from the 29th, you got the first day would be the 30th, 31st, 1st, 2nd, 3rd, 4th, 5th, 6th, 7th, 8th is the 10th day. During that time, the 1 means they would receive a 1% discount for early payment. So not only did you get all those trade discounts before, you can get an initial 1% discount off of that invoice price if you pay early before that discount period. Did I say credit period there? Oh my. Before the discount period is up. It's going to be one of those nights. Dyslexia is kicking in pretty hard tonight. Sorry about that. Okay. That is the discount period. This date down here is the end of the credit period. At that point, it must be paid. That is net 30, means it's 30 days from the invoice date. What is 30 days after 7/29? 8/28. So August 28th would be the end of the credit period. In your textbook, I've got to verify that in the current edition of the textbook, it's still the same page. Used to be 396. Let's make sure it still is 396. And it still is. On page 396 of your textbook, you have a calendar that is listed out. Each day of the year is numbered from 1 on January 1st to 365 on December 31st. Now it looks scary, but it's actually very useful for figuring out this table here. For example, I counted out those dates, but if you didn't want to do that, you could look up in that table July 29th. So you find July on the top of the table, and you follow that down to the 29th. What day of the year is July 29th? $210. Everybody see where I found the 210? Yeah. Okay. Now, 10 days after that is the end of the discount period. What's 210 plus 10? 220. So now find 220 in that table. And you'll see 220 is August 8th. The credit period ends 30 days after the invoice date. So you got 210 plus 30 is 240. Find 240 in there, and you'll see that that is August 28th. So that table helps you find these dates. So let's do another example here. So let's say our date is May 18th, 2017. The invoice amount, $7,000. Terms of sale, $2,500 net 30. Let's do our timeline here. Oops. Let's make that look like a line. What goes at the beginning here? Yep, so that's going to be May 18th, 5/18. What's this next date here going to be? This is the end of the discount period, right? What date's that going to be? 23rd, because it's 2/5 means it's only 5 days after the invoice date. During that time, if you pay before the 23rd, you get a 2% discount because it was 2/5. 2% in 5 days. Then down here is the end of the credit period. What date is that going to be? 6/17. It always goes back to the invoice date. You add 30 days to the invoice date. And that's a common mistake people make is they'll add 30 days to the end of the discount period. Both of these come off of the invoice date, always. So let's say our date is February 15th, 2017. I'm going to start dropping the year, by the way. The amount, $4,100. Our terms, got that a little backwards. So let's do 2/10/115 net 60. So the initial date up here is going to be February 15th. That is the date of the invoice. Now there's going to be two intermediate dates here. What percent discount do they get right away? 2%. So the end of the 2% is going to be on what day? 2/25. Good. After that, there's a short period where they would still get 1%. What day does the 1% end? 3/2. Very good. That's 15 days from the invoice date. So February 15th, you go 15 days out is March 2nd. What day do they have to be paid up without getting penalties? April. What? Careful. February 15th is the 46th. So 60 would be 106. It's actually going to be April 16th because February is a short month. Okay. So it's April 16th. So if they don't pay up by April 16th, after that, they're going to start getting penalties and interest added on to it. Sometimes their penalties is losing one of their trade discounts. You know, that's one of your incentives. Oh, you had a late payment, so you've lost this trade discount for the next quarter. Now, the next step here, how much would they pay on March 1st? Well, on March 1st, if they paid on March 1st, what discount do they get? It's 1%. So, remember, 1% discount means 100% minus 1%, which is 99% paid. So the amount paid is going to be the invoice price, invoice amount, times 0.99. That is the complement of the discount. The term complement just means 100 minus that discount of 1%. So what we're going to do is we're going to take that invoice amount of $4,100 times 0.99 gives us $4,059 is the amount they would have to pay on March 1st. What do you think? Not bad? So we're going to have you guys try one on your own. Sure. So the invoice is dated December 14th for the amount of $6,000. Terms are a 210 net 30. Find A, end of the discount period, B, end of the credit period, and C, the amount paid if paid on December 31st. I'm going to pause and give you guys a couple. So I know I did something kind of mean here. Doing it in December means we have to roll over into the next year. What date is December 14th? If you look at our chart, December 14th is what? 348. That would make 358, because it's 210, the end of the discount period, right? So 358 is 12/24. Merry Christmas, huh? Now here's the problem. We go to the end of the year. So since we're going to go past the end of the year, we're going to take 365, which is the number of days in a whole year. We're going to subtract the invoice date of 348, which is going to leave us with 17, right? There are 17 days that have gone by. So how many days are left in the credit period? 30 minus 17 is 13. So that means we need to go 13 days into the next year. So that would be on January 13th. So the credit period ends on January 13th. Now, if it is paid on December 31st, how much do they pay? The full amount, $6,000. Very good. I know, those are the types of problems I get told I'm not a very nice person. You got any questions on that? Part of our terms of sale, we have date modifiers. What these do is they change the effective invoice date. One of them is ROG. ROG stands for receipt of goods. Usually used for items that are slow in shipping. So what that means is when you ship an item, the person who receives it has to sign for it. Now, it used to be when they signed for it, the company that was shipping it would take a copy of that signed receipt and they would have to mail it back to the supplier, right? Well, nowadays, we've got electronic tracking. So when that's signed for, it goes into the system and it electronically emails or whatever notifies the seller, the supplier, that it's been received. Because if we have something that's going to have to be shipped by truck, usually a larger item, and it might take 2 weeks to get shipped from the supplier to the retailer. If we have a 10-day credit or discount period, they can't get they don't even receive it before their discount is up, do they? So what this does is it means the invoice date will not start until they actually receive the goods. Then even though the date on the invoice says some other date, it gets effectively changed to the date that the goods are received. So let's look at an example of this. So let's say our date is 3/27. Our amount is, we'll stick with our $6,000. Our terms, $210, net 30, ROG. Delivery confirmed 4/9. How much is paid? If paid on April 17th. So on our timeline, what date goes at the beginning here? 4/9, the delivery confirmed date. That's what the ROG means. ROG means instead of using the actual date on the invoice, we're going to use the delivery confirmed date. So the effective date of the invoice becomes April 9th. What is the end of our discount period then? 10 days would be 4/19. End of our credit date? 5/9, right? That'd be 30 days. It's paid on April 17th, so they get 2% discount. So we're going to take $6,000 times what? 0.98. Now I'm going to pause for a second. 100 minus the 2% discount is 98%. That's where the 0.98 comes from. Which is what, $5,880 is the amount paid. Any questions there? Not so bad? We're about halfway there. The other common modifier that comes into play is EOM. EOM stands for end of month. Now, end of month is an oversimplification of this. Technically, it's end of period. Every business is going to set this up differently. For our purposes, we're going to oversimplify it. We're using a month as our period. What this is it is for a company, usually a smaller company, that does not have a full-time bookkeeper. Oops. Or they have a full-time bookkeeper, but that person has other responsibilities other than just invoicing. Large corporations, large companies have large bookkeeping staffs. They might even have one person who is in charge of just constantly sending out invoices, which means the date that item gets shipped, the invoice gets completed and the invoice is sent out. Well, if you're a smaller company, like a mom and pop operation, a smaller company where the owner, the sole proprietor is the owner, may be doing the bookkeeping themselves, they don't have time to send out invoices every day. So they might send out invoices every Friday, the end of every week. Or they might send out invoices every month or every 2 weeks or whatever. They don't have time every day to do invoices, so they pick a date every regular period and they send out those invoices. Does that make sense? Well, to simplify it for us, rather than looking at weekly periods and bi-weekly periods and whatever, we're going to keep it monthly. Our period is going to be a month. So what that means is, let's say this is March 1st, April 1st, May 1st, and so on. All of the invoices for the month of March are going to get bundled up, and they're going to get dated effectively the last day of March. So the effective date of every invoice is the last day of the month. So what's going to happen is this owner or whoever is handling the invoices on the last day of the month is going to go gather up all the invoices that have been produced. A lot of times they're produced in the shipping and receiving department. It's been shipped, they produce the invoice, and it's going to process them and send them out on the last day of the month. Notice I left a little bit of a gap here because let's say you're in the shipping and receiving, you load that truck and you ship it out, you produce that invoice. Do you run straight to the bookkeeping department and hand it to them? No, it goes to an outbox. It's going to get taken to the bookkeeping department. It might sit there for a day or two before you get enough to take up there, right? So invoices that are produced in shipping and receiving these last couple days of the month might not make it to that bookkeeper. It might be a day or 2 or 3 or 4 days to get up there. Well, rather than leaving it wishy-washy like that, we're going to set an arbitrary date, and that date is going to be the 25th of every month. Invoices produced on or after the 25th go into the next month. So what that means, everything from February 25th, the month of February, by the way, is the reason we use the 25th. If it takes you 5 or 6 days to get an invoice from the loading dock up to your bookkeeping department, you've got some internal issues. But February only has 28 days, so that's only 2 or 3 days. So that's why we use 25 for every month, just to keep it simple across the board. But that means everything from February 25th to March 24th is going to get invoiced as of the last day of March, March 31st. And everything from March 25th to April 24th, April 24th, is going to get invoiced on April 30th, the last day of April. Make sense? So let's look at an example. Oh, by the way, EOM is implied to be net 30. When we get to an example, I'll explain some of the intricacies with that. Because again, it's like everything else. There are some issues with it. It can be different from one company to the next. We'll discuss those possible differences and how we're going to handle them in a little bit. So let's say our date is April 13th. The amount, $4,500. The terms are 210 EOM. Notice there's no net 30 because the EOM implies net 30. Find the amount paid on May 9th. Let's do our timeline. Where does this timeline start? Where does the timeline start? April 30th. EOM means it starts as the last day of that month. Now then, everything else is figured from that. So the end of the discount period is 10 days from that, which would be May 10th. Which makes it pretty simple. If it's a 210, it's just the 10th of the next month is the end of the discount period. The 30th of the next month, that would be the end of the credit period. And that's how we're going to handle it, is the 30th of that next month. Now there's two issues. One, what about February? We're going to try to avoid EOM with February. Some people would say 30 days, so that would make it March 2nd. Some companies do EOM, means the credit period ends the last day of the next month. So rather than this, it might be the 31st that it would end. We're just going to say it's always the 30th of that next month to keep it simple. But it could be, if it were February were that next month, it could be 28th is the last day of February. Or if it were July was the next month, it'd be the 31st would be the last day of July. Again, to keep it simple, we're going to make it 30 days. So it's paid on May 9th. Do they get a discount? Yes. What percent? 2%. So 4,500 times what? 0.98 was $4,410 is the amount paid. I think you guys are ready for an example. Sure. So let's say our invoice is dated August 27th. For an amount of, we'll just go 3,000. Our terms are 110 EOM. Find the amount paid on October 2nd. I'm going to give you a couple minutes. Okay, so what is the date that this whole timeline is going to start at? Why September 30th? It's after the 25th, so it does not make it into the August batch. It goes into the September batch. Which means the discount period ends October 10th. Credit period ends October 30th. Don't feel bad. I did that intentionally, and most people mess that up the first time they see it. That being after the 25th is one of those details that. So they paid on October 2nd, so they definitely get the discount. So it'll be 3,000 times what? 0.99. Again, that's 100 minus 1%. So, yes, $2,970. Well, the one thing we haven't talked yet, shipping costs. Who pays? Well, eventually the consumer, right? Well, the weird part about it is they don't describe who pays, they describe who doesn't pay. The term is free on board. Where is the shipping point? That's the supplier, right? So FOB shipping point means the supplier does not pay. So by default, who pays? The buyer pays. FOB destination. Well, the destination is the buyer. So that means the buyer does not pay. In other words, the seller pays, supplier pays. If not otherwise listed, both are FOB, free on board, yes. If it is not otherwise listed, we assume that the buyer is going to pay the freight. Often the freight is prepaid by the seller and later reimbursed by the buyer. The reason for this is pretty logical. If I am a shipper and this seller is giving me this object to take to this buyer, says, yep, the buyer will pay you when you get there. No, you're going to pay me now before it goes in my truck, right? And the buyer will pay you back. So let's look at an invoice with this wonderful information added to it. I'm guessing you need a second to catch up writing. Yeah. Free shipping if you order whatever, or just pay shipping and handling. Yeah. So our date is going to be September 28th. The amount is $8,000. Terms 210 EOM. Seller prepays $300 in shipping. Now it doesn't say FOB anything, so who are we going to assume is responsible for the shipping? The buyer. How much paid on November 5th? Now, hopefully I didn't catch you on this one with the dates. So what's the date that starts off this timeline? October 30th, 31, October 31st, last day of October. Why is it October and not September? After the 25th. Sensing a little hostility from the crowd. When does the discount period end? Yes, November 10th, 11/10. There's a 2% during that time. Then, of course, credit period ends November 30th, right? They paid on November 5th. They get 2% discount. How much do they owe? No, the buyer owes the 8,000 plus the 300 in shipping, right? So do they do 8,300 times 0.98? Say no. Exactly. It's 8,000 times 0.98, which is 7,840. And then we have to add in the shipping of 300, $8,140. That shipping is a real expense. The supplier had to pay the full $300. They're not giving the buyer a discount on that. That's a reimbursement. It's not really merchandise. It's an expense. So there is no discount on shipping. Ever. No, I know I'm exaggerating this a little bit, but no discount on shipping ever. That's huge because there's going to be a lot of other times where you're going to be tempted to give them a discount on shipping and you can't. Also, this might not make sense why I'm saying this right now, but shipping is paid first. So if, let's say this buyer sends a check for $1,000, well, the $300 for the shipping comes out first before it's applied to the rest of the invoice. Let's give you guys an example to play with. Let's say our date is March 13th. The amount is $5,000. Terms, $215, net 30, ROG. Delivery confirmed March 25th. Seller prepays $600 in shipping. Find the amount paid on April 8th. I'll give you a couple minutes. I'll let you off the hook. What date should go here at the beginning? March 25th, the receipt of goods. So, what's the end of our discount period? 4/9, 15 days after March 25th. End of the credit period? 4/24, 30 days after March 25th. They paid on April 8th, so they get 2% discount. 5,000 times 0.98 is 4,900, and we add the 600 freight. So it's not so bad. The freight isn't so hard to figure out when it's a full payment. However, there are times when we get up to the end of this discount period here and that buyer cannot pay the whole amount, but they want to take advantage of that discount as much as they can. I mean, look at that discount. They're getting 2% for basically 20 days worth of, wait, I mean, they're going to have to pay it at this point anyway, right? So 2% for 20 days. Think about that. 365 days, there's divided by 20. That's like 36% in a year. You're getting that 2% for 20 days. That's a pretty good return. So businesses want to take advantage of that cash discount as much as possible. So even if they can't pay the full, $5,500, they're going to pay as much as they can before the end of that discount period. So when we come back from our second break, we're going to look at what happens with those things called partial payments. It is 7:20, so we will come back at 7:30. Roll. So partial payments. To understand partial payments, we're going to look back up here at this little row right here. We took $5,000 times 0.98, which gave us 4,900. Well, the amount on the invoice was 5,000. So that is the amount that gets credited to the invoice. How much did they actually pay? 4,900. That is the amount that is actually paid. So if I wanted to go the other direction, if we have a 2% discount and we have a person who pays let's say $2,700, well, $970. How about I do this right? $940. Make it easy on myself. Find the amount credited to the invoice. Well, the 2% discount is going to correspond to that 0.98. Right? So it's still the same discount. But here what we have, the 2940, is this last number. That's the amount that is actually paid. We're trying to go backwards here to get the amount that's credited to the account, the invoice. When we're going this direction, we multiplied. If we're going back the other direction, we're going to divide. Very good. So we are going to take the 2,940 divided by 0.98, which gives us $3,000 that is credited to the invoice. So now, oops, sorry. Let's look at an invoice that is dated April 27th for the amount of $2,400. Terms $210, $115, net 30. Seller prepays $250 for freight. Find the amount due, in other words, the balance after a partial payment of $1,500 on May 3rd. Let's do our timeline. Where does our timeline start? 4/27, April 27th. Now we have a 2% discount period. Where does that end? 5 5/7. April only has 30 days, so it'd be 10 days from 4/27 is 5/7. Then there's a 1% period, a short 1% period. Where does that end? 5/12. 15 days past 4/27 would be 5/12. When's the end of the credit period? 5/27, May 27th. They paid on May 3rd. What percent do they get? 2%. They paid how much? $1,500. What is the first thing that $1,500 gets used for? Shipping of $250. So that means only $1,250 gets applied towards the invoice. In other words, to the discount. So what do we do with that $1,250? Careful, we're going backwards. Divided by 29. It's okay. So that is going to be $1,275.51. Gets applied to the invoice. That's the credit to the invoice. What was the original invoice amount? $2,400. So we will take $2,400 minus $1,275.51, which is going to give us $1,124.49 is the balance due. What do you think? We will not add penalties for late payment. No, we will not do that yet. Sure. There. So we have an invoice dated December 26th for an amount of $18,000. Terms. 210 EOM. Seller prepays $1,100 in shipping. Find the balance after a payment of $3,000 on February 5th. I'll give you guys a couple minutes time. So what's the date that this timeline begins? January 31st. I almost put February 1st. Yeah. So then the discount period ends on February 10th. They'll get 2% in that time. Now, there's no February 30th, so we're going to say March 2nd would be the end. Put February 28th, that's fine. February 30th, well, tell you what, You can lend me $1,000 and I'll pay you back next February 30th. So anyway, they made this payment on February 5th. So they get the 2%. They paid $3,000. What happens to it first? Minus the $1,100 of shipping. So only $1,900 is going to go towards the invoice. What happens with that $1,900? Divide by 0.98, which is going to give us 19. What's that? 193878 is the amount that is applied to the invoice. That is the credit to the invoice. So what is the balance? You got our $18,000 original amount minus the 1,938.78, which is 16,061.22, right? What do you guys think? No. Tell you what, let's give you a little bit of a capstone for the evening. And if you guys get this one, we'll call her good. Now, I'm going to warn you, we're probably going to have to do 2 or 3 of these before you guys get it, okay? SMP Corp purchases 7 sets of equipment at $3,000 each on March 28th. SMP receives a 793 trade discount. The seller prepays $1,200 in shipping. The terms are 110 EOM. SMP pays $12,000 on May 6th. Find the balance due. I will take a look. What date does this begin on down here? April 30th. Good. So then there's what percent discount? 1% that goes until May 10th. And then, of course, the end of everything would be May 30th. Now, what amount even goes on the invoice? How'd you come up with that? But we do have 7 times 3,000. It's $21,000 list price. What goes on the invoice, however, is net price. So the trade discount is a 793. So this is 0.93 times 0.91 times 0.97. This is that single or net decimal equivalent. Okay, perfect. So yes, 0.820911. Yeah, no comments about 911 at this point in the night. So 21,000 times that. That is it, 17,239.13. That's the invoice amount. Now they made a payment of $12,000 on May 6th. Do they get the discount on that? Yes, they do. So it is perfect. Well, not the discount, but the shipping. So there's actually 10,800 that gets applied towards that invoice amount. 10,800 is divided by 0.99, which is going to give us 10,909.10 is the credit, which means the balance. I can get this thing to settle here. There we go. Will be our 17,239.13 minus 10,909.10. $6,330.03. How many of you got that? About 3 people. Let's try another example, see how we feel. There will be one like this. I know if you want to go, you can. We'll do one more example. We only had 2 or 3 people get it, so just a little bit. We only had 2 or 3 people get it. I wanted to do at least one more just to make sure we've got it. Mm-hmm. Yep. You got it all down? Okay. So our new example. I know these are long, but we're almost there. FMQ purchases $32,000 of items on May 7th. FMQ's trade discount is 11.94. The seller prepaid $900 in freight. The terms are $315 net 30 ROG FOB shipping point. FMQ, oops, FMQ pays $12,000 on June 1st. Delivery was confirmed on May 22nd. Find the balance. I'll give you guys a few minutes. So our first step, we're going to establish the dates. The date that this all starts is the day it's delivered because it's ROG. So May 22nd. The discount period is 15 days long. So that goes until June 6th. And it's 3% during that period. So the credit period would end June 21st. 30 days. The payment is made on the 1st. So they do get 3%. Now let's look at the invoice. They had the 1194 discount, was 0.89 times 0.91 times 0.96, gives us for our net decimal equivalent, perfect, 0.777504. So multiply that by the list price of 32,000. So we get a net price of 24,880 and 13 cents. That's what goes to the invoice. So then we take our 12,000 that is paid, and what do we do with it first? Subtract the 900 in freight. That's 11,100 that's going to get put towards the invoice. What do we do with that? Perfect. Divided by 0.97. 11,100 divided by 0.97 is going to be what? 11,443.3 what? 30? We gotta go to 2 decimals just because of because it's money. So it'll be 0.30. So it is right, 0.30. So that is the amount that's going to be our credit. So we're going to take the 24,880.13 minus 11,443.30. You got it, 13,436.83. Okay, so there is a new quiz. Yes. Oops. 0.97 is worth 3%. So that's where the 3% makes it 0.97 instead of 0.98 or 0.99. That's a very good question because the 3% kind of gets hidden in the whole process. So yes, there's a new quiz due tomorrow on Thursday at 11:59 p.m. There is a new homework for next week. There is class next week, of course. The week after that is an in-service day. And then so it'll be the week following that. So 3 weeks from tonight will be Unit 2 tests. Have a good week. Try to stay awake. You guys all look like you're